Thank you, Joshua. Thank you, Shane. We're going to take a little bit of a turn away from a conversation about markets and a conversation away. We're going to take a little turn away from the federal government for a quick chat about state financial regulation. And we have with us someone who has been on this stage before, and she is tremendous. And she makes time for us and is thoughtful and is building something, I think, that is the model for how to be collaborative with an industry from a state regulatory level. Superintendent Adrienne Harris has said many constructive things, but she also is a straight talker. And I think we appreciate that. She has said that she, more than anyone, is eager to have a federal partner and to see federal legislation and regulation, and has noted that it's important that when regs get written, that there is a role for the states. And she stays very abreast of every development in our industry, but she is also a cop on the beat, and she wants to strike that cop on a beat and innovation balance. She has grown NYDFS from, I believe it was 4 staffers when she first began, to over 60 dedicated to the crypto sector. So that is impressive on every level. She's worked at Treasury, she's clerked for a judge, she's been in private practice, she worked on the National Economic Council in the White House. She really is just the full package of oversight and knowledge for our industry and the financial sector at large. She is going to have a great conversation with Candace Kelly, the Chief Legal Officer for the Stellar Development Foundation. Please welcome to the stage Superintendent Adrienne Harris and Candace Kelly.
This is a big couch for just 2 of us. So, well, welcome back. Thank you so much for coming back. It's always very informative to have you here.
Thanks for having me.
So I think this is a pretty sophisticated audience in the blockchain world, but just in case, can you just start with a little refresh on the mandate of New York DFS? Obviously, it's a state agency that has implications across America, across the world, and also maybe it's the very end of the year, so some 2024 highlights.
Yeah, some 2024 highlights. Well, thanks again for having me, for that very kind introduction. It's almost like I don't need to be here. I could just leave it at that. So New York DFS, for those that don't know, is the state financial services regulator for the financial capital of the world. We oversee state chartered banks and credit unions, several thousand insurance companies from life, health, and P&C, virtual currency, obviously, student lending, mortgage servicing, recently pharmacy benefit managers. So you name it, we regulate it, including 15 GSIBs, about 100 foreign institutions. So we really do cover quite a broad swath of things. We've had a whole host of wonderful accomplishments from this year, but specific to crypto and blockchain, we've issued our 9th piece of guidance, this one about customer service expectations. And as was mentioned, we've really spent a lot of time growing the team from a real skeleton crew to what is now the largest crypto regulatory unit anywhere in the world at over 60 people.
Yeah, 4 to 60. That's pretty amazing. So you must be exhausted. But,
well,
hopefully they're all helping you now.
Yes, absolutely.
But building that team takes a lot of effort and commitment. So thank you for doing that. Let's just jump right into stablecoin regulation. Can you tell us a little bit about how you have approached that and New York has approached that, and compare that a bit to other jurisdictions? I'm sure you talk to lots of jurisdictions, states and outside the United States as well.
Yeah, absolutely. So we have probably what is the most rigorous framework. Before I came to DFS, it was sort of the bane of everybody's existence in industry, but we've done a lot to operationalize the framework better, including adding the 9 pieces of guidance to the regulation, building the team. We've, of course, brought the first ever enforcement actions out of New York against crypto companies. But if you look at our regulation, right, the same cybersecurity requirements that apply to our banks and insurance companies apply to our regulated crypto companies. The same BSA and AML requirements that apply to our banks apply to our crypto companies. We have very robust capitalization requirements for our regulated institutions. And with respect to stablecoin, a couple of years ago, we put out the first stablecoin guidance in the nation, requiring one-to-one reserving with cash and cash equivalents, T+2 redemption time. Reserves have to be in an insured onshore institution. So we really laid out a robust set of guardrails for the stablecoin universe. And then what we've seen, fast forward, not just on stablecoin, but on crypto more generally, is other states, foreign jurisdictions, and Congress, and many of the bills that have come forward over the last couple of years are all really borrowing from the New York framework as now it's the gold standard.
Yeah, it absolutely is. And I joined the Stellar Development Foundation in 2019, and I learned a lot from the guidance and sort of made that part of the ecosystem. Certainly, I mentioned to you earlier, New York DFS was the very first meeting I had as the general counsel of the Stellar Development Foundation. So you definitely are the gold standard. And now we're headquartered in San Francisco, so working with California and trying to help them follow your lead. Excellent work. So despite all of this guidance and clarity that you have brought, there are still misconceptions. So can you tell us, both from industry and from just the public, some of the misconceptions that you come up against, and you have some ambassadors here who can try to help you to continue to beat those down?
Yeah, and it's really funny when you get the view from the outside world on what DFS is doing well, what maybe we're doing less well. Those misconceptions really run the gamut. So on the one hand, we have people say, "Oh, it's too rigorous a framework. You don't like innovation, right? You're stifling innovation." But when you look at investment in crypto companies, the plurality of that investment is in New York regulated companies, and indeed we see companies marketing on the fact that they are regulated by DFS. So really what we've seen is that transparency and that rigor has been a catalyst for investment and growth in New York, right? So the rigor of the framework and innovation are not at cross purposes. They actually work very well hand in hand. At the same time, we get people who say, "Oh, you're so industry friendly, you're pro-crypto, you're too light on industry." And I'm like, well, wait a minute, how can both of these things be true? Right, and I think people think DFS is industry friendly because there is this idea that if you regulate the space, if you have transparent rules on the books, that means you are sort of putting your stamp on the legitimacy of the space. And my response is, look, it's not our job as a regulator to decide what the market wants or doesn't want, right? These instruments are here, this technology is here. It's our job to protect consumers, protect markets, and ensure responsible growth in the industry, not pass judgment on the value of the innovation, right? That's the job of the marketplace, right? Of customers, of entrepreneurs. And so we do get those misconceptions sort of on both sides of the coin, which I think is interesting and says to me that we're probably doing something right.
Yeah, I think that that lesson about regulators are not passing judgment is so important, because all of us in this room probably spend a lot of time talking to policymakers, regulators, and I think it's human nature to try and pass some judgment and say, oh, well, if we regulate it, that means that but if you really are putting the consumers and first in terms of protecting them and empowering them to be the market that makes that decision. But I do think that often gets lost. So I think everyone here can help.
Well,
and
I'll give you one quick example too. I remember early in my tenure, we allowed a pilot to go forward with one of our crypto companies, and I got a bunch of incoming calls from federal regulators saying, like, how can you do this? This is a terrible thing, right? Don't. And we had put lots of good constraints on the pilot in terms of the number of transactions, the aggregate value of the transactions, right? All of those things just to make sure this thing would be rolled out safely. In the end, it turned out to be a thing that didn't have any consumer take up. The company didn't come anywhere close to the guidelines we had set for the pilot. So the market decided, and we were able to put those protections in place, but ultimately, right, it wasn't a thing of value for consumers, and it sort of went away. No harm, no foul.
Yeah, those are important stories and important reasons why they're pilots and sandboxes and things like that to test that out. So we're here in Washington. there was an election recently. It's changed
Heard something
some
about that,
things.
yeah.
So I'm just curious, from your perspective, what do you think this new administration will do for financial markets, both here in the U.S. and globally? We are the United States, so we
Yeah,
have a little bit of
absolutely.
influence.
So, historically, when you think back, especially when you have a change in party, right, you think about Democrats sort of being heavier on regulation and consumer protection. Republicans generally sort of have a deregulatory bent. I think what's interesting about this current election is you have these sort of populist wings in both parties, and so there's a little bit of unpredictability here. I think also, everybody's talking about sort of the non-traditional picks in some areas that the president-elect is making, and then more traditional picks so far in financial services. So I think from our perspective, it really doesn't change what we do. The most important thing for us is predictability, transparency for the marketplace, for consumers. And so we'll continue doing what we're doing. A big part of what we do is engagement. So we, as you mentioned, we've been very engaged with federal regulators, with Congress as they've been working on the various bills over the last couple of years on crypto and stablecoin internationally, and none of that is going to change. So we're eager to see who's coming in some of these financial regulatory roles, and we'll continue doing our work up in New York.
Excellent. And it sounds like you make plenty of trips down here as well to talk
Here quite
to
frequently,
lots of people across the administration and the Hill, I'm sure.
Yeah.
So if there is, many of us have been working, and you have as well, on getting a federal crypto framework in place. From your vantage point, and of course we can't predict exactly what that looks like, but at least from your discussions and what you've seen, how will that affect the BIT license regime and the other states that are leading the charge in that?
Yeah,
regard?
well, as was noted in the introduction, there's really nobody who's been more eager, I think, for a federal framework than us, save, of course, our federal partners, Chairman McHenry, Majority Leader Schumer, Senator Gillibrand, Senator Lummis, right, who have really been pushing these frameworks. So we really do want a federal partner in the space. I think it's important for consumers. It's important for the U.S.'s leadership role when it comes to technology, innovation, and financial services. So we remain hopeful. We've been engaged over the last 2 years. I can't even remember how many drafts of different bills we've seen from both the House and the Senate, but I remain optimistic that something will get across the finish line, hopefully in the next year. But we have been very clear in saying that any federal framework that passes needs to preserve the role for the states. And there's lots of examples of this in financial services law and more generally, where there's a federal floor and then states can match it or exceed it. But it's important because states can often be much more nimble. And this is a perfect example of a place where states have been more nimble and faster moving and closer to industry developments, positive and negative, than the federal government. And I don't think it would be wise to sort of erase the expertise that we have in New York that other states are developing while the federal regulators sort of get up to speed. I think preserving the state's authority in this space is going to be really important for experimentation, for developing responsible innovation, and making sure as a regulatory community we're staying abreast of developments.
Yeah, so I completely agree with you. And when I have conversations, particularly here in DC, there's a fair amount of pushback, particularly from folks who are in states that are not New York, that are not California, that are not some of the states that both have the resources and the expertise to be able to do that. Say, oh, well, we can't let the states do that because there's going to be a race to the bottom, and everyone's going to go issue their stable coin in. I won't name any particular states, but what do you say to that argument?
Yeah, we hear that argument all the time, and we say, but look at the New York framework. It is the most rigorous framework anywhere in the world. And when you talk to the authors of MiCA, you talk to the folks at the FCA, you talk to the folks in the UAE, they all say, we use New York as our model. New York is still the most rigorous framework, but so it just doesn't prove out that there has been a race to the bottom. And I think the other thing that people don't think about, right, is if you have even this patchwork of requirements, right, which is one of the knocks on a state regulatory system, is you can't have a cybersecurity program, for example, for New York, and have a different cybersecurity program for New Jersey or Connecticut or Pennsylvania, right? When you have rigorous requirements in one state, it elevates the framework enterprise-wide. So we have, companies that are doing business in New York that are regulated by us. They also have a subsidiary or affiliates around the world, but the cyber protocols that they have are the same throughout the enterprise. The BSA AML framework that they have is the same throughout the enterprise. So there is this sort of leveling up effect that happens. And again, I'll go back to, right, companies market on the strength of being regulated by New York. So I don't think the industry is interested in a race to the bottom, right? Everybody wants to sort of minimize the burden of regulation, which is understandable. But I don't think it behooves the industry to say, we went to the lowest common denominator. I don't think people are interested in that.
Yes, so the market, again, has a role here.
Yeah.
Are there, you made some mention of the patchwork. I think you see that in privacy, you see that in money transmission licensing. Obviously, there have been some sort of after-the-fact efforts to harmonize and make that a little bit easier. Is that something that you work on with other states in this space to make sure that there isn't the same, we have to now go to 50 different states and take X number of years and X number of outside legal spend dollars?
Yeah, no, absolutely. It's a challenge. And, one thing that wasn't part of the introduction, right? I have been a tech entrepreneur, right? Helped start a company where it was 4 of us and a PowerPoint deck, and went and got venture funding and built the company to what was ultimately a public company. And it was a state regulated, right? It was an insurtech company. So I remember being the person going to all the state capitals and sort of re-educating myself on all the different state capitals. It was like my 5th grade geography lesson. I was shocked at the number of capitals I had wrong in my head. But we really do want to try to eliminate that both within the U.S. and internationally. So we work on a number of things with other states where we try to get to reciprocity or some sort of limited passporting regime. We're working on some things internationally now that I hope to roll out next year around passporting, around joint supervision of entities. On examinations, often the states will collaborate and do an examination together. We're working on an enforcement action now that I think will be, a number of states together. But at the same time, that patchwork allows for innovation and experimentation, and for us to put out a stablecoin guidance, have other states maybe try something slightly different. But we really do try to stay harmonized. But then, of course, we have to look out for the specifics of our own marketplace, right? New York is different from a lot of other states, from most other states, and so we are going to have more expertise. We are going to have a more robust market, and so our regulations will likely be a little bit different.
Just confirming, New York City is the capital of New York, right?
Yeah, don't get me in trouble with my boss on that one.
So I know it's not just crypto in your world, and I don't think we can have a conversation these days without talking about blockchain and AI. Mm-hmm. So can you tell us, at least in a short, high level, of what's the approach of regulating? Obviously new technology is always exciting. There's so many. I think we're all using AI. We may not all recognize some of the risks, but the tech always comes with some risks, and the regulators help to step in and mitigate those. So what's the approach in New York? Yeah,
so obviously it's a big topic, and I feel like most of the time when people talk about AI, generative AI, large language models, they're throwing out jargon, right? But to your point, don't always understand exactly what it means, both in terms of risk, but also in terms of opportunities. So for us, we've really tried to break it down into bite-sized pieces. So we did guidance, which is not relevant for this audience, but about insurance, underwriting, and pricing in AI. We left for another day claims management and customer service, focused on underwriting and pricing. Then we just recently released guidance on AI and cybersecurity, both on the risks, but also on how AI might be used as part of a defense mechanism for a financial services institution. I think we will probably early next year say something about AI and blockchain and crypto, but for us it's really been about taking these bite-sized pieces. We do it in the form of guidance because it's a really good regulatory tool to allow us to move quickly rather than going through a rule-making process. It's about adding transparency and clarity for the market. And even though it's not legally required, we will more often than not put our guidance through a comment period because these issues are complicated and we want input from our stakeholders. So we did that with both of these pieces of guidance that I've just referenced, and there'll be more to come as the space evolves.
We can end on that engagement piece because it is really important that there's this public-private dialogue, and we've definitely obviously seen some agencies more open than others. As I mentioned, New York DFS was my first meeting in this when I moved into the blockchain space. So what works, what doesn't work? What advice do you have to this audience in terms of engaging and making sure we're helping the process along?
Yeah, so we are all about engagement, industry, consumer advocacy groups, academics, right, other regulators at all levels of government. It's so important because these issues are just too complex to think, frankly, that you're going to get right all by yourself without talking to all the stakeholders. So my advice is always twofold. The first thing that I say everywhere I go is never surprise your regulator. We are by nature a risk-averse people. We don't like to be surprised, so come in and talk to us proactively. But even if it's not about a filing that you have or some discrete action that's in front of us, come in and tell us about the 5-year business plan so that when we're engaging with you on an application, on a change of business filing, we have that context and that relationship is there before you need it. We love sort of talking to people about the big picture, about the business strategy, and not just about a particular regulatory action that's in front of us. So I welcome you all to come in and spend time with the team doing just that.
Yeah, well, in-house counsel also don't like surprises. I use that line all the time. Like, please just don't surprise. Just come talk to us. Come talk to us. Well, thank you so much. It's been very informative, and I know you're headed right back up to New York, so we appreciate you coming down and being a part of the BA Summit every year.
Well, thanks for having me. Thanks, everyone.
Thank you.